In this video, traders, we're going to explore the concept of doubling your position size after a winner. Stay tuned. Hey guys, warm welcome to you. All right, so this is something that was kind of brought to my attention as a kind of interesting way of maybe growing your account, and it's I think it's a good idea. It's definitely not for everybody this, but there's some good kind of concepts to it. There's some hidden risk in it, but let's explain how it all works. Now, this is something very similar to what I did when I was kind of first starting trading back in 2001, 2002, so probably 2004, but on a trade level. So as a trade was going my direction, I would add more position size. So I was kind of pyramiding into the trade, really, but I was leveraging on the profits I'd made during the trade as kind of firepower to increase the size. Now, when the trade worked really, really well, you had a big winner. When it didn't work well, which is more often than not, you come back and you come out break even. And it's kind of the concept of this. So we'll go through it in a minute. So what are the advantages of this? Well, you think about how you trade generally, you will probably have runs where you're doing very well, and that's because you're in tune with the market. The market conditions are really good. The market's conducive to your edge. It's working well in the market. You're kind of good place mentally. You're rested, relaxed, refreshed. You're just operating at a high level, and that's showing in your results. And from my experience, guys, that's exactly how it is. You have good runs where you're doing very, very well, and there are runs where you're not doing so well. And another skill set that would kind of another video really is to know when to step back and go, don't do any damage to your account. So your equity curve is up, starts to come down. Okay, back off. Let me just be careful. Market comes back into line again, right back up for go again. So that's the normal cycle of a trader throughout the year. So really this concept is capitalize on that, and basically the trap that many traders fall into is they tend to double up on positions after losers because they want to get back to where they were. So they lose $100, they go, right, take twice the position size, I'll make my $100 back and I will be $100 up, for example. Oh, I lose again, I'll double up again, I'll make up all my losses and I'll be up $100. And that's, to me, that's a gambler's fallacy, because especially in trading, if it's working for you, it's working well, it tends to go in runs, it tends to come in clusters. So this is taking advantage of that, whereas the other way around, you're kind of using that to your disadvantage. So let's have a look at some of the ideas. So imagine we have a trade number here, very simple table, guys, win or loss, and how much we are kind of risking and rewards. So imagine your risk reward ratio is 1-to-1. It'd probably be better than this, but imagine you risk 100 to make 100 bucks in this example. So you can see that your first trade you risk 100 bucks, you make 100 bucks, you're 100 bucks up. Next trade you risk another 100, but you also risk the 100 you made. So you still only got I know people are going to say, well, it's already 100 you've got in your bank, you are risking 200. Yes, you are, but if you use it as an anchor point from there, you're still risking the initial 100. So your risk over this isn't more than it was at the beginning of the trade. Yes, you are risking profit that you've made, but that's kind of the point. So now you're risking 200, and then use that profit from there. You say, great, that's a winner. So 200, I've got $300 of profit here, plus my initial 100. I'll now risk 400 on this next trade. Great, that happens to be a winner. I now risk 800, 1600. You get the idea. So very quickly, by the end of trade 5, you can be making a pretty decent sum compared to what you were initially. Now, those of astute of you out there immediately going in the comments section, I can hear those keyboards tapping away already. Yes, but Mark, what about if you lose? Well, yes, this is the downside to it. You can't have your cake and eat it, guys. You kind of have to accept that, I could well get my loser on number 5 and I'd be down $100, so I'd have given back all of that profit. So you've got to understand where you sit with that mentally. If that's not going to be comfortable for you, then don't do this. This is something to say it's an all or nothing type thing. I'm looking to get 5 trades in a row. I'm looking to get my account up to this size, or add a 0 on it, or whatever, or however you decide to trade it. And bearing in mind, guys, a couple more trades, your account starts getting significantly big, because of course, 1600, 3200, 6400, etc. Doesn't take many more trades for you to be, really maximizing the potential of the compounding gains. Now, of course, then it's like any game, if you like. The risk has gone up, and your you're going to get to a point where you're not going to be trading the same. You're not going to be trading the same as you're on $100 on the line as when you've got 6,400 on the line. You're just not going to. So at some point, you've got to know when to kind of pull this back and then maybe start again. But this isn't something for everybody. If you're growing your account slowly, then no. It doesn't make any sense to do this. If you perhaps have a kind of high risk account, sub account that you're kind of growing quickly, maybe you're scalping, or you've got some kind of different way of approaching it, then if you understand the risks, understand the concept of it, why not? If you've got a small account and you kind of, right, I want to grow it quickly and I'm prepared to risk it all on each thing. Because don't forget, every time you do it, you're risking it all. So if you had a loser here on 5, you'd be back to square one, you'd be down 100. And you wouldn't be any worse off than you were if you'd lost this trade here. But of course, this is all money that's in the bank. It is your money, even though theoretically we're kind of using it as risk money. It is your money. You've still got that money in the bank. So you've got to be aware of that, and there is a psychological impact to that. The other thing to look at here is on this other table, guys, same 5 trades, but imagine you've kind of broken even, up, down, up, down, up, down, up, down. You've made 100, lost 100, back to 0. And it takes a run of kind of 3 trades to get you going again. And yes, you could have a run of 3 losers, of course, but then you don't double up. You go, right, minus 100, minus another 100, minus another 100, and it's not as damaging. Now, I get that you could have, the danger you have is you have a run of winners, you then have a run of losers, and you don't bank that, and you go and you're kind of doubling up, and in reality, you've kind of been up to 1,600, then you're back to minus 300, and there is a psychological impact of it. So this isn't a kind of fix-all strategy in the holy grail, guys. It's just something to consider, a high-risk way of building up your account quickly by leveraging on something you think has got a high probability of success. So if you've got an edge that's working in the markets, you've spotted something, there's a little pattern that's working day in, day out, or whatever it may be, and you want to leverage on that, you want to say, right, I'm going to trade this for a month or a couple of weeks or whatever it is, and I'm going to employ this type of thing, and I'm going to, when I get to 3,200, I'm going to reset it, or however you do it. It could be something to consider. This is not conventional. Everyone says risk 1%, but hey guys, you're here to make money. You're here to grow your account. And sometimes growing it by $50 every trade isn't good enough. Sometimes you want to go, well, I want to leverage on things a little bit. I'm prepared to give back a lot of profits. I'm prepared to roll the dice a little bit. I'm prepared to kind of cap the risk but have unlimited reward and still feel the pain potential if I get up to a high number and lose it all, but I understand that and I'm still prepared to go with it. Anyway guys, that's doubling your position size after a winner. Let me know your thoughts in that comment section below, and as always, take care, keep your risk managed, don't let that put you on tilt. If you lose a 1,600, don't go back in with 1,600 straight again. That's not the point. Take care, bye bye.